This is the story of my first year investing as a beginner. Starting out, I was very overwhelmed and everything investing seemed like a different language to me. So, I watched a lot of videos and read some books on investing. And the book that stood out to me was The Intelligent Investor by Ben Graham. Turns out he was Warren Buffett's teacher at university, and if you have been living under a rock like I was and didn't know who Warren Buffett is, long story short, he has over $100 billion in net worth mainly through investing in stocks. Anyway, before we get completely sidetracked, from the videos I watched and the books I read, I learned to look at businesses behind the stocks. For example, how much money the company made and more importantly, kept. Also, how much debt the company had, among other things. I took the plunge and bought my first stock, and over time I continued to buy more of that stock. After I felt I had as much as I wanted to invest in it, I stopped buying. Now it was a waiting game. I had also bought a second stock, but I will talk about that in another video. For most of the year, the two stocks I had bought hovered around a 5% loss, but within a few months they dropped 10, then 20, then 30%. This is where a lot of people would have cut their losses and sold, and maybe even said investing in stocks is not for them. But having read The Intelligent Investor, I knew there were going to be market downturns. And having thoroughly researched the companies I bought, I knew they were in a good financial position and would almost certainly survive the downturn. And yes, there were days I still had doubts, but I kept going and didn't sell. And about 12 months into holding the stocks, they had come back to be about break even. I was happy I had not sold and successfully waited out the market downturn. And then, something happened about 1 year and 3 months into my investing journey. The first stock I had bought went up 5, then 10, then 15%. And looking at the price to earnings ratio, I saw the ratio at over 40. I knew this was very high for this type of company. And while I don't use charts for picking stocks, I had a look at the RSI indicator. It was about 73 at the time, and it was then that I knew that the stock was very overbought. A few days went by and I decided to sell. I had made about 16.5% at this stage. And just for context, a $1,000 investment would have made back an extra $165. For a $10,000 investment, that would have made back $1,650. Or if you're an absolute giga chad and you put in $100,000, that would have been an extra $16,500 return. Then, a few weeks later after I had sold, the stock dropped 5.8%. At this stage, I was very happy that I had exited at the time I did and made that 16.5% and wasn't greedy and tried to make more. I'll be making more videos about my experience investing, so consider subscribing if you want to see them.